last video of 3 parts for Lecture 1. The other measure of company performance is its cash generating capacity, which also determines a company value. Such information is provided by the cash flow statement. If the income statement is measured under accrual accounting, the cash flow statement is measured under cash basis accounting. In reality, we just convert the income statement from accrual to cash basis of accounting. For example, some of the revenues on the income statement may not have been collected during the year, so that they add to the accounts receivables reported on the balance sheet. Such increase is deducted from accrual revenues to arrive at cash revenues. In addition, some expenses on the income statement are not paid or payable in cash, such as depreciation expense or loss on disposal of equipment, so these must be removed. Such direct adjustments produce a cash flow statement presented under the direct method. However, a more common method is to make these adjustments against net income, an alternative presentation called the indirect method. So in our example, the depreciation expense and the loss on disposal of equipment are both added back to net income to remove their effect. These illustrate some of the non-cash adjustments to net income. The increase in accounts receivable, on the other hand, is deducted from net income to remove the effect of uncollected revenues for the year. This example reveals one of the reasons why we add or deduct certain working capital adjustments of current assets and current liabilities. The net accrual to cash adjustments to net income result in operating cash flow, which is a measure of cash generating ability of the firm from its business operations. With respect to the cash aspects of non-current assets and non-current liabilities, these are presented under the investing and financing cash flow sections respectively. For example, the purchase or sale of equipment or of patent are all investing cash flows. The borrowing or repayment of long-term debt or the issuance or repurchase of company shares are all financing cash flows. However, some investing and financing transactions do not involve cash, such as paying long-term debt with buildings or issuing equity shares for acquiring patents. These non-cash exchanges are excluded from the cash flow statement. Instead, they are disclosed in the notes to the financial statements. The IFRS and US GAAP are essentially converged, except for additional option in IFRS in presenting interest and dividend received as investing cash flows, while dividend and interest paid are financing cash flows. The relative amounts of these 3 cash flow categories provide important insights. For example, a positive operating cash flow covering negative investing and financing cash flows demonstrate that the company generates enough cash from its business operations to fund expansion projects, pay creditors, and even return some of the capital to owners. The interplay of their amounts give rise to measures of free cash flow to the firm and free cash flow to equity, which are alternative bases for company valuation. The net sum of all 3 categories of cash flows are then added to the beginning cash balance of the company to arrive at the ending cash balance reported as of the date of the balance sheet. In summary, we have demonstrated over 3 RapidTeacher Lecture videos how the balance sheet, income statement, and cash flow statement are all linked, so that the reported balances must be consistent across and among these financial statements. In other words, the numbers must add up. That is the end of our Lecture 1. In our next lectures in this Rapid Teacher series, we will discuss in detail each of the financial statements and their key components, including their measurements, presentation, and disclosures. We will also demonstrate how you can apply analytical tools and techniques to reveal important insights about a company. By then, you will have acquired the important and valuable skills in financial statement analysis of a chartered financial analyst. If you have comments, suggestions, praise, or criticism about this lecture video, please do so below or email at support@rapidquizzer.com. With RapidTeacher, you will know it well.